Hello and good afternoon, everyone. My name is Matthew McCora. I'm going to be your host for today's event. We're going to be drilling down into a straightforward yet powerful approach to break down and identify breakout trading opportunities. The method we're going to discuss is going to be simple, transparent. I'm actually going to be uncovering every piece of the strategy with you. Nothing will be left uncovered. It'll be fully transparent and readily open for any types of questions on how to utilize the techniques here today. My goal is to really take you by the hand and give you an approach that I believe can really simplify your ability to identify, number one, trend direction, number two, the best opportunity of timing your trading. Not only getting in, but you're going to also see today how to manage each and every trade. So think of this today as more of a workshop than anything else. You know, I've been in the industry for a very long time, pushing 15 years at this stage, and not just from a trader's perspective, but from a executive running a large organization, creating programs and resources for retail traders, but also from an individual trader's perspective. So we're going to jump into that. I just want to make sure everyone has an opportunity here to get logged in. I know a lot of you have logged in early, and then we have a handful of you just getting logged in now, which is totally fine. The market just closed. So this is the time that I start looking at the markets, is once the market has closed for that day. So at this point, let's just do a simple audio and video check. Let's make sure that the video sharing is coming through. You should see my slide. This is a sound check, and you should hear me clearly. If that's the case, let me know in the question section. Say hello, give me some note that all is working well. Oh, hi, Robert. Good to see you. IBM and T-Mobile. Yeah, we'll look at those. I'm sure they are if you bring them up. I'm sure they are. I know you're an avid follower of the program. All right, Damon, appreciate it. All right, good. Okay, so I won't go through and read everybody's comment. Yeah, I normally show my webcam, so if you see me before, you know, it's normally up and running, but the technology is not working for me today. So hopefully my voice alone and my chart work can overcome the webcam for us. All right, so based on that, everything's working well. I know you're excited just as much as I am probably to jump into the actual meat of the event, and that's what we're going to do. So I want you to really think through and just think about this simple process. We're going to talk about momentum and trend patterns. We're going to put these two together as a vertical approach, meaning we're not going to look at the charts left to right. We're going to look at the charts north to south, up and down. Okay, and so the reason that's relevant is because we're looking at a timing event. You're going to understand by the end of the event today what to trade, when to trade it, and how to trade it. So to do that, we're going to use some objective data points that are easily found on any types of charting software that you're comfortable with. These are openly and widely used indicators. There's nothing proprietary about the indicators I'm going to be giving out today. All right, so I'm using TradingView. What I'm sharing with you now, these are just some recent trading examples of utilizing the strategy I'm going to share with you today. Now, this is options. These are option trades, but we use this stock to find these option trades. So this is a trade in about 30 days. We walked away with 120% profit. This is a short trading the option versus shorting gold. This is GOLD. This is not the precious metal. This is actually a mining company called Barrick Gold Corporation. But we identified a breakout, and instead of shorting the stock, we decided to buy the put option, and now 65% over 8 days. To give you an idea about the recent performance, we've been actively trading through this entire bear market. If you follow any type of financial experts or shows on cable, or maybe you watch Bloomberg or any other financial site out there, much of what you're going to hear is how all these analysts, hedge fund traders, even institutional money is not actively trading the markets. They're not buying anything. In fact, we have the largest short positions from these hedge funds and institutional traders. So, but my group, we've been actively trading, buys and buying calls, buying puts, holding stocks throughout the entire last 11 months now in the market. These are some of the recent results. So we're running a 71% winning percentage. Net profit is running 342% over the last few weeks. So to put that into dollars and cents, if you followed these trades, for every $3,000 you invested in the trade, you'd have over $10,000 in profits. Now, if you traded $1,000 per trade, you'd have about $3,000 in profits. Okay, I just want to show you that no matter if the market's red, if the market's green, there's opportunities that present themselves. And so one of the advantages for us as retail traders is that we can be nimble. A lot of these institutional traders, they're talking about hundreds of millions of dollars of assets under management. Someone like BlackRock, which is the largest hedge fund, is pushing nearly $1 trillion under management. They can't move around their money as easily as you and I can. They can't switch directions as easy as the retail trader. And so that flexibility is a benefit. And as I said, my group's been actively trading in these conditions. So just like any presentation you've seen before, I've got to share this disclaimer with you. It's an obligation that I have. I've got to let you know that trading in the financial markets carries risk. You can lose what you put into a trade. You can lose your account. And I think ultimately we're all adults, and you should know only to use risk capital. You know, that's basically money that if you do happen to lose, you can still keep food on the table and keep a roof over your head. If we can do that, if we can focus on money management, then I think we can do quite well. So simple and repeatable steps to trading is what my main focus is here today. As I stated when I first began speaking with you today, think of today as a workshop. I'm not just going to be sitting on a slideshow for 45 minutes. I'm going to be actually on the charts, walking you step by step the strategy. I encourage you to ask questions so you can really understand this process, because I can assure you one thing, this can simplify your approach of identifying what's going to happen next, right? That's what this all comes out to, is being able to know what's going to happen over the next few days. The reason that to me is valuable is because you remove fear, indecision. I want to lower anxiety levels. You know, when there's a red day, I don't want you to be shocked that it's a red day. You'll be going into the market knowing to expect a red day. And then you'll also know when to expect a green day in the market. And not just one day, but a wave of green days, okay, or a wave of red days. So that way we're always aware and always have a high level understanding of what to expect next. And ultimately, of course, it's all to do one thing, and that's to make money. How much money you make, or how much, is based upon how much money you're going to put into the market, right? So everyone's got a different comfort style of how much you invest per trade and all that good stuff. But ultimately, it's about how do we get a return on our investment. Now, that have yet to meet me, my name is Matthew McCoro. I've been in this industry since 2007. Not just in the industry, but as an active teacher, coach, and mentor and trader in that time frame, starting in the last great recession that we had. No matter how bad it feels now, if you're when you look at your retirement accounts, this is still not anywhere near as big of a bear market as we dealt with in 2007, 2008, 2009. That's when I learned my chops on charting analysis. It was back in 2007, 08, 09, and of course, every day since then. So what I found is that in that initial experience, being in that great recessionary period, is that you're still able to find value buys, great trading opportunities, be it buying or selling stocks. If you like to trade options, it just adds another dimension and flexibility to your trading. That's where I initially learned is, so I feel very much at home in this bear market condition that we've been living in. So momentum and trend patterns are just as applicable in a bull market as it is in a bear market. All right, and so that's why I'm so excited to go over this with you all today, because when the time comes on the recovery, just like we saw in the 2020 post-COVID shutdown period, that was a massive recovery period. Just like we saw in after the fourth quarter in 2018, if you remember that fourth quarter, that was brutal in the markets. Market fell down about 20-25%. The recovery after that was wildly successful and gave us a very strong bullish recovery, right? And of course, going back to, we had a brief bull market in 2016. Then we had, of course, the 07, 08, 09, okay? So understanding what I'm going to share with you today, I can assure you one thing, it will really dramatically shift your perspective on the markets. So now that I've gone through a little bit about my background, look, this is what I want you to be able to walk away with. You're going to be able to walk away understanding how to identify clear breakout patterns. I'm going to give you a secret order strategy to how to set your trades up on autopilot. That really removes your need to be in front of the computer all day pushing buttons. And then the third thing is I'm going to actually give you a step-by-step checklist so you can see exactly how to break down a trade, how to set up an entry, how to know when to set up a profit target, how to do so, and how to, of course, manage your risk by using stop losses. If you want to trade options, I'll show you how to trade the option with it too, okay? That's what we're going to do in about an hour. All right, we're going to bang all of these three things out. And so with that, I just want you to know what we're going to be working on today. Now it's time to have some fun and get over to the actual charts themselves. So what we're going to do is I want everyone now, let's make this a little bit more personable to you. And I want to pull a list, a watch list from you in the room. So right now, type into that question section and give me your top stocks you want me to use and to break down this strategy with today. So I don't want to come up with my own canned stocks that I'm trading. I want to hear from you. And what I'll do is I'll create a special list for us today, and we'll work off that list. Because no matter what markets you trade, could be an ETF, could be a stock, could be a futures symbol, you know, any of your choice, I want to pull up and I want to break down for you. So let's build it. We got Marvell. Let's do today. So today is 11/1/2022, and then let's do Investorexpo. All right, so first on the list was Marvell, I saw. Let's see what else we got. We have SLB, it's one of my favorite stocks. Let's go, we got Safehold, STNG. Let's see, we had T-Mobile, I saw from Robert. Also IBM. Wait, was it IBM or Intel? Lockheed Martin, that's a runner. Oh, Amazon, beat up Amazon. Yep, IBM, okay, good, I got it. How about the rest of you all? Let's get 4 or 5 more. It doesn't take long to go through this, that's why. Oh, Bank of America, okay. For Donald, I like it. We got Visa. I'm always interested to see what stocks are on your minds. Eli Lilly, yeah, some healthcare. All right, perfect. Oh, Oxy, it's another one of my favorites. All right, so it looks like we have Quite the list. Airbnb. Oh, Mike, is that the right symbol? LUN? Oh, London Mine. Oh, okay, there it is. Oh, it's on the TSX. All right. All right. Great list. We've got, let's see where you all are at. Let's see. So the room has okay, look at this. Look how diverse this room was. So we've got an even mix across the 12 sectors. This looks like a well-balanced portfolio here. Look at this. It's a wide wheel. Electric technology, industrial services, transportation, communications. Look at all that. All right. That's a well-balanced fund. All right. So what we're going to do is we're going to really break down this process, and I'm going to be sharing with everyone, and I'm going to simplify this a little bit. I've got a lot on the screen here. Let me get to my simple version here. So what you're seeing here, this is TradingView. If you're not familiar with it, this is a online charting platform. They also have a desktop application. That's what I'm running. But this by no means, what I'm sharing with you in the setup that I use as far as the chart indicators is available on any platform. Okay, there's nothing proprietary about the indicators that I use. It is public domain indicators. I mean, any free software from stock charts, bar charts, to TradingView. This is a paid version of TradingView, but TradingView has a free version too that you can run this entire strategy with. The reason I do that is because I don't think on my core belief, after creating products, selling technology in my career, I was a chief revenue officer for one of the largest financial education and training technology companies at the time. I don't believe that there is a need and an upside to spending hundreds and hundreds of dollars on software. So with my group, in the rapid profit method group, I like to keep things affordable. I like to keep costs down, because to me, I think the focus needs to be on how do we get a return on our investment of the money we put into the market, not charging thousands and thousands of dollars for education, thousands of dollars for software. Okay, it's just not my style. I've been doing this too long, and I don't think that's a need in the marketplace. So anything here, you do not have to use TradingView. Okay, you can use any software that you're familiar with. What I want you to see is I used 4 indicators. 3 of them are for trend. I've got a 10-day moving average, a 20-day moving average, and a 50-day moving average. This setup using a 10, 20, 50 combination is a swing trading time frame. It's a specific group, and it's a mathematical group for a hold time. So an average hold time, meaning in a position, is on average about 3 weeks. Some trades happen in a few days. Some trades take about 30, 45 days, but all in all, in over 350 trades, the whole time with this setup is about 21 days. Now, this is not the only setup I use. If I'm looking at a longer term buy and hold situation or a longer hold time investment, then I'll use a larger range of moving averages. I'll use a 50, 100, 200 combination. These are simple moving averages. Okay, these are not exponential. This is not weighted, though you can use them. Okay, I prefer to use simple. It's easy to teach and easy to understand. The 4th indicator I use, you'll see it here on the bottom of this list, is volume. It's a simple volume indicator, and that's what we use for momentum. So in essence, going back to where we started today, this is a combination approach of using trend patterns, which we use the 10, 20, 50 to identify the trend. And then we use the volume as the momentum. So that's what we're going to be putting together today. Now, I'm going to initially start off by hiding 3 of the 4, and we're just going to walk through the use of the longest time frame, which is a 50-day. So once I hide the other indicators there, meaning I hid them from the chart view so we can't see them on the actual charts themselves. The first thing we're going to do is just walk through the relationship between price and this trend line. That's what this is. This red line here is a 50-day trend line. And so the way it works, if you're not familiar with it, is it's fairly simple. It takes an average close price over a specific time, and I set the time. This instance, it's 50. That means it's taking the last, and it's a rolling average, okay? So it takes the last 50 days, adds them up, divides it by 50, and gives me an average price. So if we take a look at the latest bar today, this is Marvell Technology. The last price today was $39.74. The 50-day average is where this red line is. You can also see the data right next to the indicator here, left of my cursor, is $44.14. So we are currently below, the price today is lower than the 50-day average price. So that means we're trending lower on price. Now the visual representation just makes it easy to see the relationship. If we're above it, like we were back here in November 2021, right? We're above that trend, that's an uptrend. Okay, so that means the price is higher than that trend line. So at the highest level of a trend, which in this instance we're using a 50-day, we can see relatively easily what the latest trend is. So this 50 becomes your long-term trend. This becomes our up or down trend indicator. Now, when we are in an active trend, we look for the reversal points. So when we're going up to down, okay, so if we're going up like we were back here at the end of the year, last year, right, 2021, you see the dates on the bottom, and then we were going up and then we went down, okay, that's the reversal point. So for us to get the biggest bang for our money is being able to identify that reversal point. That's going to historically give us the biggest runway of price movement. So we're always identifying where is the moment of that initial reversal point. And if you can begin to clearly identify and see the areas of where you get the initial reversal, time and time again, you will see the biggest move following that, okay? And so the breakout begins at reversal points, okay? So when a stock chart or price is going down, then it starts reversing, okay? So back here in May, we were trending down, and then we had this moment where we flipped it, okay? So we were trending down, then we trended up. Same thing on the opposite side when we start flipping below it, okay? That becomes our rolling support and resistance levels. That's what these trend lines are. It's the same way if I'm manually drawing trend lines. I can manually draw with the best. Some would classify me as a master chartist. But what I found when dealing with retail traders and dealing with anybody, learning any new skill, is the difficulty when art is involved. See, getting trend right, in my experience, is one of the most difficult things that retail traders have to overcome, is getting the direction right. So you get it wrong when you buy something and it goes down against you immediately, right? Within a day or two, you bought it, and the next thing you know, it's going the opposite way. Okay, that's a simple symptom of being on the wrong side of the trade. Now, in my career as a chief revenue officer, I was also responsible for support. We had over 100 employees, team members in the company. We had a huge support team, We also had a sales team. We had a marketing team, of course, right? We had a product team. Product team fell underneath my purview as well. And so being able to have access to the customer support tickets, seeing what the customer frustrations were, 8 out of 10 always came down to getting trend right. And a big issue is because when I'm manually drawing anything, the word drawing is an art form. It's art. No matter if you objectively generate a trend line like this manually drawn trend line here, it's subjective due to art. So rather than do that, we're using math. And that's what a moving average is. It's a simple average math formula. And it's consistent. There's no emotions to math. It is a mathematical objective equation that is consistent. So now whenever you see a chart, you're going to first look to where is the price in relation to, and some of these charts you'll see has additional analysis because we trade them often. Okay. So when I look at SLB and I see the price at 51.60 or 51.55 today, and I see the 50-day average is way down here at $41, I know that's a uptrend. If I flip over here to safe, it's a safe hold Inc. It's a downtrend. Now it's close, right? But it's not about is it close or not. Are we below the 50-day moving average? We are. Okay, it's in a downtrend. Let's go to Scorpio Tankers. Okay, that's an uptrend. T-Mobile, uptrend. IBM, uptrend. Lockheed Martin, big uptrend. Okay, Amazon, downtrend. Bank of America, uptrend. See all my additional analysis down there. Let's see, Visa, uptrend. Eli Lilly, uptrend. Oxy's an uptrend. Airbnb, let's see, downtrend. Okay. Lots of additional analysis. These are ones we've looked at before. Here's LUN, London Mining Corp. This is an uptrend. Okay. So just by one trend line, we're able to quickly identify, are we in an up or downtrend? What is that relevant? Well, that means, okay, am I going to be buyer or am I going to be seller? If I'm looking at a downtrend like Airbnb, okay, I don't want to buy. I'm not a buyer yet. It's not a matter of what to trade. It's also a matter of when to trade it. Safe is a downtrend, but it could be reversing soon, right? But the when is the most crucial part. So in just a simple walkthrough, we're able to identify. Now, why do I know it's an uptrend or downtrend? Well, let's go to Marvel, right? It's in a downtrend. Just go back and see how does the market react depending upon which side of that 50-day moving average am I on. Anytime I'm above it, you see how we're making higher highs, higher lows, creating an uptrend. When we're below it, we're creating new lows. Okay? It's just, you can go back as far as the charts want to go, and you can just keep reading it. Right? So number one, you need a quick mechanism, a simple method to understand where we're at in a particular trend. What pattern are we in? And it starts with trend number one. So you may be thinking, well, then why do I need the others? Okay, well, the other time frames, I'm going to start with now the 10-day. The value of having multiple trend lines in one snapshot is that we're getting multiple data points to help us further understand what to expect next. So I'm going to get rid of the price bars for a second here. We're going to start back at the top. We're going to start back with Marvell. Now the 10-day works just like the 50. The difference though is I'm only looking at the last 10 days of an average price. The 50 is 50 days, okay, the 10 is 10. So what we also pick up, a data point, is we're able to see now a short-term trend. So we now have a short-term trend to now add to our analysis. The 50-day you're going to find, if I scroll out here, has less fast up, fast down movement, right? It's a smoother line, less erratic, than the 10-day is when you compare it. So when we start to see the 10-day cross down on the 50-day, you see what happens now? This sets a reversal point of the trend. Okay, so now we have an ability when we have the candlesticks on to see when price moves below the 50-day. Well, now we incorporate an additional data point of trend lines crossing. Okay, so we can now get an effect of a trend line also reversing course. So that's why I started with the 50-day, because that's our largest time frame. These moving averages and these or trend lines, they create levels of support or resistance. That's what trend lines are. That's what these moving averages are. Now, if you don't know what support and resistance is, I'll keep it very simple. As I turn on the price, when we are above, and let me get rid of this 50-day for a second too. When we're above the 10-day, which means the blue trend line, right? That means we have support underneath price holding it up. When we go below the 10-day, we have resistance, and it constantly moves. One day you have support, the next day you could be in resistance. And because it's a 10-day average, it runs very close to the candlesticks. So anytime you see, like we are right now, you see how we're running on top of, I mean, these open and close and these lows are forming a level of support underneath the last 1, 2, 3, 4, 5, 6, 7, 8 bars. Type in S if you see that. You see how we're supporting the last 7, 8 days here, how that 10-day average is supporting up. It looks like it's basically holding up price, right? That's support, okay? So when I throw on the 50-day again, what you're gonna see is that we've got the 50-day hanging on top of us. This is resistance. So we have a longer term trend as resistance on top of us. And you can see what happens to the market. We come down away from the 50, comes back up, bounces back down off of it, comes back up, bounces off of it, and creates this extension retracement look and feel. Okay, that's what a wave pattern is. Okay, people like to throw around the term wave patterns. I use it a lot too. Okay, but a wave pattern is doing nothing more than measuring and identifying, putting a name to this look of a chart. Okay, where the market extends and then it retraces or pulls back, and then it extends again. Okay, that's the markets don't go in a straight line, either up or down. Okay, so extension, retracement, extension. So on this downtrend, extension down, retracement, extension, retracement, extension, retracement. Okay, that's what this latest swing pattern is. So ultimately, if we want to get into a buying position, now I don't say we in the we ownership state. What I'm saying is, if we want to buy Marvell, I want to get into an uptrend first. I want to have the highest probability that when I buy it, it's going to go up in price. Well, I know that I have resistance here on top of us. The market does not go in a straight line. So for Marvell to get above this 50-day, it's going to need support to get there. Right now, the 10-day is starting to create the support to get Marvell into an uptrend, which would mean we are above the 50-day moving average. It doesn't happen in a straight line, right? So the first step to end a trend direction, in this case, we're talking about a downtrend, we need to see the prices start to get above the inner trend line, which is going to be this 10-day, okay? It won't get up there without it. So when I incorporate the 20-day, okay, given our third confirmation of direction, we're adding another level of analysis, another data point that can help us identify the support and resistance levels. And so what I'm going to do is I'm going to go back in time here, and I want you to see the reaction to what price does. So from initial reversal, meaning we close down below, so simple terminology as well, close is the most important price of the 4 prices. You have an open, high, low, and close. Where a chart or a product or a symbol closes, okay, the final close is the most important price. Doesn't matter where it opened, doesn't matter how low it went or how high it went, okay? It matters what was that final price. That's the most actionable and most important price. So when you get this close, and this is a red bar, right? So red bar means it was a bearish day. I'm on a daily chart. 90% of my trading is done on a daily chart. So for the day, this is back in August, we closed below this 50-day moving average. At that moment in time, we have a pattern reversal. So watch how the market reacts as it starts to break that trend line. Now on top of us, you see this 10-day. The 10-day finally just crossed, okay? So on a reversal, the first thing you're gonna see go are the bars themselves. So in this instance, the bar went first, then a few days later, we had the 10-day confirm the downtrend. Watch that market go back up towards that 10-day. You see how we ran away from the 10 and then came back to it. That's not an unplanned, unforeseen move. It is a natural reaction. Look how it then comes to the 20-day moving average. And then it bounced down. Look how it then settles and tries to find support at the 10-day. Resistance held on the 20-day up top. Ran away from the 10. Look at that high. Come up to the 20, come back down. That's resistance working. Then we get another extension move. It's going to come back to the 10. There's the comeback to the 10-day moving average. Again to the 10. Oh, now we got on top of the 10-day. All right. Oh, now we're running into the 50-day resistance. Oh, next day came and blew through and took out the 10 and 20-day. Now we're getting another extension down. We're going to come back to that 10-day again because it's going to happen. Look at it now flipping, getting above. Now we have a sandwich between a 20-day resistance and a 10-day support. You see it sandwich in here? See how it came back in down below the zone? Look how it's now coming back down to the 10. Support looks like it's going to win, and here we are today. Understanding the relationship between these really helps sets a tone for the next expectation. So for here, the expectation is that we're going to flip and get on top. The 20-day is going to keep coming down. The 10-day is going to cross up here. As that 10-day crosses up, it's going to be the bridge of support to come and challenge this 50-day moving average. So when I scroll back up again, you can see how fast down it is, and now it's going to come angled back upwards towards that 50-day. Because the moment of the reversal is where we get the biggest percentage movement is at a reversal point. And so if we can identify that and know when we're there and when we're not there, then we can ensure that we don't jump too fast. Okay? We don't want to be too fast. We want to have a just right mindset. The timing needs to be just right. So when I now incorporate all 3 of them together, look to SLB. Strong extension move, came back down to the 10. Anytime we're above the 10-day, that's a very strong trend. Okay, you see how strong this is when we're sticking above support on the 10-day. Okay, so now it's not only is it up or down, now you can tell yourself, okay, wow, this is a very strong trend up. Now, eventually, we're going to come down and take out the 10-day and come down again. That's just the nature of how the market works. Nothing goes in a straight line. You see safe hold. See how we came up against it and then came back down today? Look how far away we are from the 10. Okay, this gap here, this distance between the 10-day and the price is going to be filled. It's going to come down here. It's going to fill, and it's going to need support to really build a strong reversal point. Just think, when you've got to change direction, when you change course, it takes a lot of energy to do it. A big break reversal takes a lot of energy in the market. So understanding the support underneath, as I've already shown, you can just look back and see how often these trend lines get hit and react off of, okay? Whenever I see this, this is a glimpse of an opportunity that it may reverse soon. It's not ready yet, okay? It's not ready yet, because if I bought right now, the probability is that this is going to come down first, and it could come up against resistance again, and it could come down and find support again before ultimately it goes. So most people can't or don't want to deal with this drawdown. I mean, you're talking about being in positions, some of you know exactly what I'm saying, where you get in and you're down, double digits. And then you simply hold it long enough, if you have the courage to hold something long enough, and then eventually it goes up in your direction, okay? But why put yourself through this turmoil and this stress and this anxious filled world of constantly pulling up your trading account and seeing a negative P&L? Most people end up just giving up at that point and just closing out, and then they get mad at themselves because they see the trade a week or two later, and it creates all this frustration in you. I love it, Richard. Yeah, I love your comment in there. I have all the clue. The clue here is you're not trading safe if you're going to buy, right? Because I know it's going to pull back first. That's what's going to happen. That's the interesting thing. I pull a list from you all in the room, and whenever I pull up here, it's stocks that you may have heard of, stocks that you may be trading in, okay? This is not my list of trades right now. Okay, these are not trades that I'm saying, okay, it's a go moment right now. There could be one. I didn't see one when I went through it, okay? These are trades that you pulled up, okay, that you all in the room gave me stock trades, and I pull them up here, okay? So Sting, let's go to the next one here. This is an active move. I know that this trade here is going to come to an end, meaning this phase of this move is going to end. That's going to be the end of this extension. So I know I'm in an uptrend, and if I see this stock, I know, okay, it's in a strong uptrend. I'm going to wait for the retracement, and then next extension move, I'm going to be a buyer because I'm in the right trend direction. Because I don't go in, I don't have a list of stocks that I just look at and I just trade all day long. I'm looking at this. This is a great example for T-Mobile. This reversal point just took place. Okay, so where we were below here, and then we just flipped above here on October 25th. Odds are, and of course, I was right. You look down below, let me give you the momentum trigger. Okay, so the top of the chart here, look at it this way. The top of the chart is your GPS for your car. It could be a truck, maybe it's an electric car, whatever you're driving, maybe a motorcycle, maybe you're on a bike, like a pedal bike. Okay, you have your GPS, you have your map. That's the top half of this. Down below here, this is your fuel. This is your energy. This is your electricity for an electric car. Okay, that's volume. This is what creates the big move on a chart, like this T-Mobile move. You see a lot of people, many of you in this room, are probably saying, oh yeah, I had a big break, because you see this E down below, earnings. Oh, that's why it jumped here. Well, this trade actually gave you the sign a few days earlier on the 25th that this was going to break out. That was the trigger. That was the go moment on the 25th. Let me explain this. Down here below, this is volume, simple volume indicator. The difference though is there's a moving average on it. Out of the box, TradingView doesn't have this turned on. So if you're following on TradingView, then you've got to turn this, you got to check this box, and it turns on the volume moving average. The input I use is 20. Just like the middle indicator is a 20-day moving average, okay? The volume is a 20-day. It matches the middle. This volume is not dollars down here. This is number of shares traded. So the fuel to your trade, to a rocket fueled breakout, is volume. It's momentum. Now, any financial show you watch, anything like that, right? They'll use the word momentum. It's really volume, okay, for retail traders, and it's the most underutilized indicator for traders is volume. It becomes the data-driven trigger point. That's your when. Okay, so there's what to trade, when to trade it, how to trade it. When is when you have the money surging behind a stock, could be an ETF, could be any financial instrument. The money makes the market go. Trading activity is what creates the price. If price goes up, there's more buyers and sellers, right? If price goes down, there's more sellers than buyers. Well, if there's a lot more buyers than normal, a lot more activity than normal, you get higher breakout of price. You get larger bars. Your average price is a higher price move when there's large volume. But the volume is not always on. Okay, it's not like an endless fire hose of trading activity. There's trillions of dollars in the stock market, even now after the last 11-month bear market. Trillions and trillions of dollars. All of those trillions of dollars are not traded every day. They're not traded across every symbol equally. It's the money flow, okay? Money goes into sectors, money goes into specific stocks, and then sometimes money goes nowhere, like today, because tomorrow is a big federal fund target rate meeting. Okay, so today was low volume across the market. This is a trigger point of when. So why was this the breakout? Okay, well, let's go back in time and let me show you the vertical approach here. So we were below the trend for T-Mobile. Okay, October 25th, you see the date. We had the break where we flipped and got on top of the 50-day moving average. Look down below. This column was higher than the 20-day average. Okay, that's a surge. Whenever we're above the average, that's a surge of volume. Okay, that's a higher average volume day. If we're below it, that's a low volume. Okay, we're going to focus on high volume today. Low volume also tells a story. Okay, but I'm going to focus on just high volume to keep this simple. So number one, we have a pattern reversal. We look down below. This is the vertical up and down look. Number two, we see a volume spike. That is a sign that there is energy around the movement. We want to be at that energy point. So the way that we trade a breakout, we don't chase anything. Okay, we don't smash a market order in intraday. We want to see a pattern. We want to see it, and then from there we want to catch it. This is part of the entry order strategy I was talking about earlier. So what we do is we set a pending order up. I'll show you in a full detail here in a few minutes. But let's talk about entry, the entry order. So on the 25th, we had a high mark of $141.90. Okay, so it's a two-step process. Number one is the pattern at a pending reversal. Okay, meaning we've gone from down to up or up to down, depending upon which types of trades you're looking for. So in this instance, we're down to up. That checks the box for pattern. Number two, we want to see momentum. We look down below, there's momentum. So we have 2 out of 2, pattern combined with momentum checked off. All right. As I started off the event today, when I said, oh, the closing bell just rang, this is when I start to trade. It's because I'm looking at a daily chart, I'm looking at a daily pattern. So what I want to see is if this continues, if it actually breaks out, that's the when. I'm going to be sitting there waiting for that to happen. I'm waiting on top of it. So this entry order becomes a pending order. And there's a method you can set this up in your trading accounts. It's not, I use Thinkorswim, but it's not proprietary to Thinkorswim. But I set a pending order that's good for tomorrow, the next day, because it's only a breakout if it actually breaks out, right? So a pattern identifies itself. Okay, we set, now I want you to imagine we put a pending order to buy T-Mobile at $141.91. It's one tick above that bar high. So it's waiting. I don't have to sit there. I literally set it at night, and then when the market's open, I've got an order sitting there. And if the market marks there, and all I have to do is hit that entry order, it's going to automatically take me in the next day. Regardless if I'm in front of my computer or not, I set a pattern. I'm objectively identifying it. I simply put it into my account, and it's sitting there waiting for the market to open. Market opens, throughout the whole day, this order is waiting there. Okay, at any point through the day, if it hits, I'm in the trade. Then at that point, I'm in the trade already. Okay, so as I stated, it wasn't the earnings that was the initial send-off point. The actual market gave you the shift 2 days before that even happened. And it goes both ways. Okay, some of you may be staring right here at this bar and going, well, how come you didn't buy that? Well, why wouldn't that be triggered? Well, let's go back in time and look at it. The value of using the pending order is that if it doesn't break out, we're not in the trade. What happens here the next day? Well, it actually reversed. We're not in that trade. That trade cancels out. It has to be greater than that bar high, the price I put my entry order, one tick above that bar high. So that avoids the whiplash that occurs. Because there's no absolutes, right? We're dealing with a probability. It's like walking out the door and you start your car, you get on the highway, right? There's a probability that you may get in a wreck, okay, right? There's no absolutes in life. There's no absolutes in trading. So by identifying and following a systematic approach, what it does is allows us to objectively repeat this process over and over and over again. But like I said, these are your random stocks, okay? The moments of the go moment, they're always going to be behind where you're at, because IBM, that was the go moment. We actually talked about this in class. Okay, let's go back on this chart. Where would be the go moment here? All right, well, look back on this chart. Did everything I just say check the box? There's the reversal point. We look down below. Was that a surge of trading volume? Okay, how do we set up? Well, we set our entry one tick above bar high. That's the entry point. Okay, in this case, obviously it did it, right? But the objectiveness isn't me just pulling a random stock. It's looking down and go, okay, there's a reversal. Up there was the go moment. There was the opportunity to jump in and go. So when I look for a trade, I want to find these moments. I want to find this point in time. If I want to go to Lockheed Martin, I want to know when this happens. How many of you would agree, right? I don't want to know where that happens. I don't want to see a stock that's running. This is a running chart. It's if you're not in it and you buy it right now, you are chasing a trade, because this trend will end. This trade will end. And the faster move up, the faster move down. So that's why you want to be at the point of reversal. So I don't sit here and go and look visually after chart, look SLB. Where do you think the go moment was? It was right here. Go back and look at it. I had trades set up here. Look at these orders I had set up. Look at this. Doesn't this check all the boxes I just went through visually with you? We had a reversal. We were down. We were up. We had the volume. One tick above bar high. So if I gave you one thing today, and I gave you a way to find this moment, and if I gave you an opportunity to find this reversal point, this bounce, right? If I gave you an ability to find stocks that look like this before all this happened, that's the process that I'm going to give you right now. And all it simply is taking the rules I shared with you now and plug them in to a screener. That's all it is. I see your questions. I'm going to answer your questions in one moment. Let me show you this. You can see the name here is an aggressive bullish breakout. Now, I started off this presentation showing you these results. The rapid profit method is something I teach. Okay, so I actually teach the process I'm sharing with you twice a week for about 4 hours in total a week. So it's 2 hours a session. Okay, it's called the Market Pro Live Club. So I teach it, but I also send out to my subscribers, I send out to my traders my picks. Okay, I send them out a couple times a week. That's what these results are. Option trades are the primary method. I also send stock trades, but the stock trades, because the market's been choppy, have been fewer. So it's been mainly option trades. The strategies I use and how I find the signals, I teach the room how to find them. This is one of the 4 primary strategies that I use. This is called the aggressive bullish checklist. This is the exact parameters, filters that I use to search the market for me and give me a list of stocks to trade. The stocks that fit this criteria here. So you can take this, can be created on Thinkorswim, TradingView. There's so many free screeners out there in the business. The reason I like TradingView is because I can take it and go right to a chart, right? So that's convenient, right? This is how I build the search criteria. Number 1, I want small caps or higher. Okay, so I have this market capitalization, so 200 million or more. So these are your small caps and higher. Small caps, mid caps, large caps, mega caps. Volume I use, I want to find stocks that average 1 million shares a day. Okay, that's what this is for. I want to find stocks that traded a minimum of 1 million shares today. These are your most actively traded symbols. They've got liquidity. They're going to give you the best types of trading conditions. That's what this is for. So think of this as liquidity. I'm going to put L for liquidity. Average volume is also a sign of liquidity. I want to make sure that these stocks average trading activity of 1 million shares or more. So I've got 2 liquidity filters, and then I've got a relative volume filter. This gives me momentum. See, this says relative volume above or equal 1. This is a factor. So essentially the formula is that it takes the average trading volume and it divides the day's activity. 1 means 100%. It's the same thing as saying 100%. So this is intentionally searching the market, making sure that they've got these 2 liquidity metrics and they have this momentum metric. So the next thing I want is the pattern, okay? Well, I'm looking for reversals. This is a bullish strategy. So the price crosses up on the simple moving average 50. This is an aggressive strategy. So I'm looking at the moment where the price crossed up on the simple moving average 50. That's pattern, P for pattern. And I want to make sure that that was a positive move on the day. That's pattern, change percentage above 0. So this screener, this filter, gives me pattern, momentum, and liquidity in one. Yes, this works for futures too. Now, the filter settings may be different on futures, but the same premise. I know we can run it on futures. I'll show you what futures look like. Okay. This allows me to find stocks at the moment of that reversal point. Okay. So now you all have this list. Okay, that's the list that you created. It's a great list, but I'm looking for trades to place for tomorrow. All of these trades here on the watch list are in different stages. Some are actively extending up. That's called chasing. I don't want to chase something down because that's a too late mentality. I want to be just right. I don't want to be too fast. I don't want to be too slow. I want to be just right. Why? Well, if I'm too slow, that means I'm going to get in too late and I'm going to run up against the pullback, right? That means I buy it and then it pulls back against me. I don't want to do that. If I'm too fast, I'm not in the actual trend yet, right? I'm still below the down. I love it. Oh man, some of these people in their comments, then don't show up. I don't understand it. Okay, so anyways, ultimately, this is a list here. There's 29 matches. Okay, watch when I pull up these 29 matches, and I want you to go back and let's go to, I don't know, where was SLB? Remember how I highlighted that this was the time to be in this trade, this moment here, where my cursor is, okay? And I said, imagine if you could be at that point in a trade. That's what this is going to do. So now watch as I go through this list of 29, and I'll start at the top, and let me give you some more real estate up top. Finding. See the volume, see the cross, okay? Look at the patterns. Now, not all of these are created equal, okay? I'll show you how to pick which one, right? But you see the flips, okay? I want you to see the flips. Down to up, look down below with volume. Put this on the logarithm so it shows up. There you go. See that flip? See the volume? This is an actionable list of stocks at a specific space and time for a breakout opportunity. That's the difference of a self-generated, or in this instance, a list that you gave to me. This is a list that's looking at specific criteria for a pending breakout for tomorrow. That's the difference here, right? So that's why the timing of when to get in, this list of 29, I want you to know the fact there's 7,200 common stocks. Those are the most commonly traded stock symbols. There's 7,200 of them. This list is a list of 29. Look at these charts. I like VET, like energy right now. XP, right? All of these charts have a different look and feel to the list you got. And there's nothing wrong with the list you gave me, but if you're looking for a stock to trade right now, I want to find this type of pattern right now. And that's what this filter does. And that's just one of 4. So now I've got an actionable list. So from here, it's understanding which of these stocks have the best likelihood to move without resistance on top of it, right? So selecting which one, because there's 29 of them, maybe you can only afford to trade 1 or 2, right? I only send out about 1 trade every other day to my traders, not because there's not opportunity, but just simply because that's just the parameters of the program itself. But there's all sorts of different types of stocks in this list, right? So from an actionable trading standpoint, now I've got a targeted list of stocks to then set up my entries, exits, profit target. Now, if I want to set up a option trade, I can do the same process as I'm doing here. If I want to be more conservative, okay, there's an additional type of bullish breakout. It's called conservative. We only have 7 that meet this criteria, only 7 of them, okay? Because it takes a lot more variables to set up. Now, Sting, this in fact, where do we see Sting before? Oh, guess what? It was also in one of your lists, right? Remember that watch list? So we actually have a match between what one of you all put in the room to an active trading opportunity, right? A pending breakout. This is conservative, so it's a different profile. It's actually a lot more criteria, right? So depending upon your style of trading, aggressively or conservatively, you've got a way to find trades. Now this one's got more pattern criteria, okay? So you've got volume, same relative volume, but now you've got 3 patterns. You've got a cross of the 10-day, you have the 10 above the 20, okay, then you have the 20 above the 50. So it's asking for more criteria, so you're going to get less matches, right? You're asking for more specific patterns or specific filter settings, so you're going to get less, right? That filter has more steps. So we're going to have 7, okay? Now you're going to see a different look. These are going to be more substantial and supported. You see support when I'm above the 10-day, I'm above the 20-day, I'm above the 50-day, right? You've got more support underneath you. That's why it's conservative. And you don't get a lot of them simply because it takes a lot of steps to get down to the bottom, right? To filter and make it all the way down. And remember, there's 7,000 plus stocks, right? So we're down to 7 on the buy side. So you can see how much this actually cuts down the work. So for Sting, we'll use Sting for example, and we'll talk about how you set up a trade here. And I'm just going to go back and see what kind of history we have. All right, so we're at all-time highs. Yeah, all-time highs. All right, so this is how the strategy entry exits work, okay? Remember, number one, we're going to set up a pending entry, okay? 52.14 is the high, okay? I want to go one tick above it. What this does is, as I showed you on a previous example, where we have a pending because we want to confirm. It's the final step. So all of what I'm doing now is precisely, and I'm going to take this all the way into placing this in a trading account so you can see the steps. I'm going to do a stock trade, and if there's an option that makes sense, then I'll show you how to set the option up too. If you want to buy a call on this. So number one, I want to define my entry. Number two, I want to protect the trade using a stop loss. Okay, so we use very simple process here to set up our stop loss. What I'm going to do is I'm going to find the last fractal low, which is 2 to the left higher, 2 to the right higher, which is here. If you don't know how to do stop loss or how to identify highs and lows, don't worry, I'll be able to teach you that. I also use an indicator to help. Okay, so a nice indicator to help is called Williams fractals, and it basically drops an arrow. As you see here, these little arrows pop up, and it helps to define and visually see highs and lows. Highs and lows, it's a defined term. It's not just, oh, the price is higher, the price is lower. A pattern high, pattern low is a real defined and important objective visual pattern. Okay, so these green arrows are support levels. Okay, it's where you have pivot points. Some people will call them pivot points. Okay, same thing. So I find the latest fractal low, okay, and I want to sit one tick under the low. I want to give some wiggle room, but I don't want to give too much risk. That's what this is doing. Now I'm going to set a profit target. It's going to be an advanced profit target because we don't have a recent price here, like a resistance point to target, because we're at all-time highs. So I'm going to use a very simplistic yet math-driven way. I'm not going to use a guess. I'm not going to use a 5%, 10%. Okay, I want to use an objective, meaning a pattern-driven profit target. So in an instance like this, when I don't have previous price that's recent here, I'll show you an example of that. I'm sure we'll find it. Okay, I'm going to set a profit target using a mathematical approach. So basically what I'm going to do here to get this target is I'm going to take the last low, which is, and I want to get a low lower than this low. Okay, see the stop loss? You know, if this is too technical, don't worry. I've got lessons on how to set this up, but ultimately, I'm going to take the fractal low, and what I'm going to do is I'm going to take my little ruler here, and I'm going to find the middle of this move. Okay, so this price move from this low to this middle, and I'm talking about middle between these price points. Okay, I'm going to do this very simply. You see, it's 20%. Okay, it's 20.87. It's $8.13. So from this middle point, I'm going to add on that $8.13. I don't want to go into this in too much detail because it can come across complex. Like I said, I've got a way to show you how to do this in a simple way. I just want to get an objective way, and it's all based on a recent pattern. Okay, so I'm going to take this $8.13 from that middle point, which is at 47.16, and I'm going to add it to it. Okay, so basically what I'm doing is I'm going to emulate and match a previous move to anticipate that next move to replicate itself. Okay, so it's a math phenomenon in the marketplace. Okay, so ultimately from that middle point, we're going to set our profit target because these cycles repeat themselves. They constantly repeat themselves. So it's a 20% move. Okay, so 58.42. So then I've got my profit target up here, 58.42. It's a process of repetition of the math function. Okay, so we've got our profit target, entry target, stop loss. Okay, now I'm going to do a 1 stock trade. So it's just a 1 exit stock trade. Now I typically do 2 profit targets, okay, but I want to keep this simple. So this is Thinkorswim. This is the trade tracking account that we use for all of our classes and signals that I send out. So here's the actual stock, STNG, Scorpio tankers, right? So at this point, what we're going to do is we're going to set up a pending entry. So I'm going to take this date and we're going to set up the trade. Yeah, we'll send it out to you, Jay. Yep, we'll send it out to you. So now it's going to set up the pending order because remember, this is today. I've done the work. Now I'm going to look to catch this trade tomorrow. I want it sitting there because if it breaks out tomorrow, I want to be waiting for it. I want to have the automation set up so it'll just trigger the trade for me. I don't have to babysit it. I don't have to be there. It'll automatically go. It'll trigger the trade automatically. So what I'm going to do now is take this. First is set the entry, $52.15. So I'm going to come into the ask price and I'm going to go to buy custom and we're going to use an OCO bracket. This is a one and done trade setup. So I set it up once, I don't have to touch it again. Now, I'm just going to do 10 shares here to start. Now you can see there's 3 tickets. Okay, there's 3 tickets here. This is not proprietary once again to Thinkorswim. You can do this on any platform. I've got the green is the buy order. That's the execution of the trade. That's my entry. And I've got 2 red. So you see the sells. I got a buy and 2 sell orders. This is a bracket. So I'm going to have a profit target and a stop loss. So the green is to open. The reds are to close the trade. So I'm going to simply take the entry price and I'm going to use a limit order. A limit order is going to set, I need to set a floor, okay? So 52.15 is where I want to buy. I only want to buy it if I'm above it, okay? So in that instance, I got to use a buy stop order, okay? So if you don't know what this means, I'll teach it to you, but a stop is basically the floor. I don't want to buy it lower than 52.15. Very important. I'm not trying to buy this cheap. I don't want to buy this if it comes in at $52 because that is not a breakout up. I only want to buy it if it actually breaks and hits the 52.15. So I got to use a buy stop order. Okay, a buy limit order, just to tell you the difference, a limit means at or better. The brokers interpret at or better as cheaper. I'm buying it at a pattern specific price. I don't want to buy it down here, right? If it literally opened tomorrow at $48 and I had a limit order, it would buy it. And look where I'd be retracing. I wouldn't be in an uptrend. That's why I don't want to buy it here. So I've got to tell my broker a specific way to buy it, okay? Once again, any clarity, I teach this all day long. Don't worry about that piece. I'll fill those blanks in. The next thing I want to do is set my profit target, okay? 58.42. I'm going to set my profit target here. It's my limit order, 58.42. I'm going to change these to good till close, okay? These are going to sit there and manage my trade. And I have a stop loss here, 4575. So stop loss here, 45.75. All right. Now, this, when I pull this up, you're going to see the entire trade detail. See, the order description is to buy 10 shares of Sting at 52.15. Okay, this is the floor. If it goes to 52.17, and gaps, it's going to buy. I want to get into this trade on a price breakout. It'll do it this way. Now, the two other orders here are your closing orders, and they're going to be open and active until the trade closes. Okay, so they're going to be available to protect my trade. It's a one cancels the other. So whatever happens first will close and cancel the other order. Okay, this is automation. This is a complete end-to-end automation of the entire trade. The green sets the trade and executes it. If it doesn't come up at 52.15 tomorrow, by the end of the day, this trade will automatically cancel itself out. It's only good for tomorrow. It's not good for 5 days, 20 days, a month. It's only good for the next day. So once I hit go, this trade now goes over into my working orders, which is here. This is the trade I just placed. It's a market order. This is everything I just did for Sting. Okay, it says working. It's now there waiting for tomorrow's market. I don't have to do anything else. If it goes live and hits 52.15, I've got my two orders and it says waiting on the trigger. So these are waiting for the green to trigger. They're connected. You see this little key? These are connected. This is one single ticket. So once I set this up as I've just done, I don't have to come to my charts ever. I don't have to do anything. If I take a 1 year break and unplug from society and go to a safari in Africa for a year, this trade is protected. If I'm gone and this hits my entry, it's in the trade. If I hit my profit target, it's going to close it out automatically, put the profits in my account all automatically. Nothing else has to be done with this trade. That is the freedom of objectively finding a trade, setting it up, and then having everything set up to protect it. Make your profit exits, make your stop losses, okay? This method is, as you can see, this is my tracking account for all activity in our classes and everything, all active signals. Look at all of these orders that are protecting every single position. Every trade I have always has a stop loss, always has a profit target, always. Nothing's left to max risk on a trade. Down here on this list here, this says rapid profits method. These are active open signals that I've sent out. These are option trades. The same method I just showed you on Sting, setting up the stock, you can do the same type of setup on options, buying long calls, buying long puts, same process. It's the same way to find options as I found here. Now, I don't know what Sting's options are. Let's take a look. I don't know if they have it has liquidity on it. Oh, it has lots of liquidity on it. Okay, so let's do the same model. How many of you want to see an options trade set up? Same process. Anybody type in a yes if you want me to show me how to do an options trade. If you're good, we can move on. But if you want to see the options, I can definitely show you. It's the same process. It's just different ticket to set up. Okay, perfect. So same parameters. Okay, we've already done the homework on the stock. Already done the homework. So to help, this is what I found. You know, this comment, I've actually picked up this comment from one of my from a trader that I've worked with for a very long time. He's also a coach in the space. Different company, but I've known him for a very long time. And he says, the more you know about options, the less you know about options. And at first he told me, you know, I laughed, but then I said, you know, you're right. There's so much complexity. There's so many, you know, so much around the active trading options that people who go too deep, it's almost it's a negative because there's just so much to look at. I mean, I could make your head spin on the different, you know, ways that people use and evaluate options. So in front of you now, this is the aggressive bullish checklist. Okay, what I found Sting on is the conservative checklist, which is here. Okay? But what I want you to see is I want you to see on the bottom here, I'll zoom in, and you could take screenshots of this, folks. You can take screenshots. I told you I was to be transparent. In GoToWebinar, if you exit full screen, you'll see a camera button. Take a screenshot of it, and that'll save a picture to your desktop. What you'll see down below, here's the entries. This is the filters I already showed you. Okay, so that's the filters here. This is the setup, right? So one tick above bar high, profit target, stop losses. I teach you how to do this if you want to learn this. You'll be amazed to see what the program is. Like I said, we don't charge thousands and thousands of dollars for this. In fact, it's in the $100 range. In fact, it's just a few $100s, okay? But down here it says option chain selector checklist. This 4-step process is how we pick the option. It's what we use to pick the option. So all the work is done up top, finding the stock that's going to break out. Now, options are a derivative of the underlying stock. As a stock goes up, the options premium goes up as well, okay? So when we find a stock that breaks out and you want to trade an option, well, you've done 90% of the work. The other 10% is identifying if there's an option chain that checks the box. Then you can do the same process, but instead of selecting the stock, you can actually just set up the option trade the same way. So when we come down to Sting, same symbol, what we're going to do now is we're going to come down and select the best option chain. And we're going to start off first with the most recent expiration. Now 45 to 90 days, so November's off the board, it's 17 days away. I'm not even going to look at it, okay? So I'm going to get rid of November. The delta we're looking for is a 65 to 75 delta. 63 delta has a 38 open interest. The rules, we want 100 or more open interest. We want 100 or more, okay? So we're not going to go with that $49 strike. Not going to go with December, okay? What I like to do is I look at these option chains, and that puts us down in January. Look at this, 11,000 open interest. So open interest is similar to volume in the stock chart. So volume on the option is not weighted the same as volume here on the stock. Okay, this is the stock up top. Open interest is the liquidity we look for in an option chain. So to keep it simple, we're going to go with the largest open interest here. We're in the money at a $50 strike. Okay, so it's a 10% or less spread, and that checks the box. Okay, so we're going to do the same trade, but now instead of buying the underlying stock, and you can do both if you want, okay, but I'm going to now use the same entry on the stock, same profit target, same stop loss, but instead of just buying the stock, I'm actually going to set up an option trade. So we're going to buy a long call, but only if Sting breaks out tomorrow. So same thing, I'm going to come down, instead of clicking the ask on the stock, I'm going to come down on the option chain, which is, we're going to go with the $50 strike, January 20th expiration. Can't believe we're already on January expirations. So same buy custom OCO bracket. Now, remember, I'm going to pull this exact same data from the entry, profit target, stop loss. I'm just going to do it on another screen so I can be full screen here for you. So same tickets here. Now the difference though is I'm going to come in and I'm going to create a contingent order. So here on Thinkorswim, and this is done on Charles Schwab, Fidelity, Tastyworks. I've got clients that use, we have hundreds of clients. I mean, we're like 500, 600, 700 clients that follow this program. Okay, so we have a lot of experience across many brokers. So I've got an ability to create a custom rule. So I'm going to set rules up to execute this trade. So on the top side is the option. So we're going to buy the option at the market premium. Okay, that's what I'm saying up top. But there's a condition here. The condition is that the stock needs to break out first. So that's what I'm setting up here. So I'm gonna now tell my broker to only buy the option if Sting marks at or above 52.15, which is the entry order. That's the pending breakout price. So there's my entry. Okay, I also want to have a stop loss, good till close. So I'm going to set up the contingent order to close my option trade out, to sell my option if we come down to hit my stop loss of 45.75. The underlying stock drives the option premium, so why wouldn't I use the underlying stock to manage my trade? They're derivatives. It's one and the same. 58.42 is my profit target. So now I can do the same process, have the same pending entry order. Now the description looks different, okay, because we added contingencies, right? So we're going to buy these option contracts. I'm going to buy 10 contracts. Here's my strike price of $50. Here's my expiration, on the condition that Sting marks at or above. I say Sting, but it's Scorpion or Scorpio, okay, but STNG marks at or above 52.15, right? That's what I got from my stock chart. If it goes live, if it triggers, then I've got my 2 closing orders sitting there, automatically done. Automatic. So now, same process here. I've got an option trade set up. Appreciate it, Arthur. This to me has been probably the biggest transformation that I personally have had in the markets. You can probably tell, but I'm a highly optimistic person by nature. So the more I would stare at a chart, the more reasons I'll find to buy it. So for me, trading when the market is closed, as it is right now, right? This is the time, like I said, I trade the markets, is right now. I don't have all the noise. I don't have all the distraction. I'm able to objectively identify opportunities, then drill down as I'm doing now. I don't have all the rush. I don't have all the urgency. I don't have all the pressure to smash the keyboard. And I can objectively take my time and identify setups. I can then place them in plenty of time. And now my job is done. I objectively found a trade. I've objectively determined the stop loss and the risk. I've objectively determined the profit target, and I'm done. At this point, I can sit back and enjoy my day tomorrow. I don't have to do anything tomorrow if I don't want to. I've got it all set up. I've got it all here. If I get into the trade and I'm wrong, I have a stop loss. If I get in and I win, I'm going to lock in profit. Automatically done. That to me is freedom. And I know for some of you, this is probably a very different way than you've seen use orders like this. And different is okay. And that's why you're probably showing up to an event like this, to see something different. This method of the charts, when you combine this method of the charts that I've been sharing with you all up here, is probably different on how I put it together for you. But this is a commonly used setup. What I have done in my career is put it together in a vertical approach, step-by-step checklist approach, so that way you can repeat this process over and over and over again. So when I share with you, here's the closed trades of the signal service program. All of these trades, that's at 342%. Everything's tracked. You see, I send out my picks on text message, email, as well as you have access to this very tracker I'm showing you. Every trade is fully detailed. There's nothing to guess, because what I like are people like you in the room that are asking all these great questions. I like people to learn this, why I do what I do, how I do what I do, so you can do it yourself, because that to me is the ultimate success, is when you can do what I do and I can do what you do. And that's what this method does, is provides consistency. So for example, on our latest trade here that closed out, these are closed, meaning they either won or lost. This is Cardinal Health. Okay, this is a signal I sent out, I don't know, a couple weeks ago on the 19th. Right, so this closed 9 days later on the 28th. So I found this trade using the process I share with you now. I found the option trade, I sent it out to all of my traders in the group. And then they simply take the trade and they place it. I mean, that's how it's literally me giving out my pick, and then you follow along with it. Okay, that's what the service is. It's called the rapid profit method. But ultimately, what it does is allows you to see how the method works, because you can pull it up and then go to a chart and say, oh, okay, I see exactly why he pulled it up. Okay, oh, that makes sense. You can go pull up your checklist and you can see exactly what it did. This is the email alert that one. So here's the details. Now that I showed you how to set it up, there's the symbol. We're buying a long call. There's the expiration to select. There's the strike price to select. If you want a premium limit, I show you how to do a premium limit, right? But if you want to put a limit on the premium, you can do that. 515 was the premium limit. There's the stock trigger. There's the stop loss. There's the profit target. So this trade was sent out on the 18th. That's the date on the top, okay, into your email. There's also an SMS that goes out with it too, with all the details, everything you see here. When you come over and see the tracker details, I also, inside the trackers, pull up and actually give you the exact ticket. So that was the ticket, just like I showed you earlier. That's the ticket, so you can see and verify, did you set up your trade correctly? Okay, try to make this as simple and as straightforward as possible. That's the exact ticket. You see the date up here, October 18th at 6:56. This is military time, 24-hour time. So that's 1,600 hours and 56 minutes, right? That's at night, okay? There's the trade details. You come to Cardinal Health on the chart, you'll see the details and you'll see the actual breakout, okay? There, that was the exact trade ticket. If I go back in time machine, go to the date. This is a conservative trade, right? See this? There's the aggressive move, right? There's an aggressive move, right? See the volume, see the bar, entry, $70.69, stop loss, profit target, got in, okay? There's the movement, there's the profit target. Inside of the tracker, you can also see the exact ticket of the exit. So here's the actual closing ticket. See, this happened at 10:25 on 10/28, 10:25 in the morning. Sold it at $9.60. You see the notes of the ticket. Sell that one contract. Here's the expiration, right? When Cardinal Health marks at or above 76.58. This automatically closed out this trade for $9.60. Okay, so when you buy something, you can see the average losses right here on the screen. These are the closed prices here. These are our closed trades for this program. I've been running a signal service program since 2018. This is for this specific program. Okay, here's the trades of the last few weeks here. Okay, these are all the closed trades for this program. 88% got it in at $5.10, closed out at $9.60. That's the profit. 1, 2, 3, 4 losses, 7 winners. Okay, 342%. Active open positions as of right now are here. You can see them all right here. We're in a Pfizer trade up 50%. Apache's up 18. Devon, this is a stock trade. It's up 15%. Oh, it's an option trade. Excuse me, 15%. This is another energy stock. We're down just about 2% here. Okay, these are active positions. Now, because of my coaching mentality, this is just the gravy on top of the program, getting my picks. All right, that's the easy ROI. The program itself is less than $300 for the whole year, for the entire year, to access the stock picks of mine, the option picks I send out, and then is that I can actually teach you how to do this, which I prefer. I really don't, I really haven't seen a lasting impact if you just simply sit back and take the signals. I mean, ultimately, you can get the signals and use them to your heart's delight and follow along with us. But for me, the big value is being able to transform and really drive your entire trading mentality and philosophy. And so to do that, let me spend the next 15 minutes going through this for you. Probably take me less than that. It's extremely simple. So this process that I'm sharing with you is called a momentum breakout strategy. That's the strategy. The signal service is called the buy, sell, and hold rapid profit method. Okay. And so effectively, it is a done for you trading signal program, and then I provide to you resources and access to me weekly to teach this over and over and over again with you. So we are always on top of the market, and we are always able to identify the next areas to trade and focus on as a group. So this program is simple and it is repeatable. So the simple questions I get with the program is, what do you need to follow along? Well, you need to have a trading account. It's not going to do much if you can't participate with us. So you need a trading account. You don't need any high level access. You need your basic access of trading calls, trading puts. That's all you need. You don't need multi-leg strategy options, anything like that. Options experience, this used to be heavier criteria, but what we've done as a group here at Concordia Financial Exchange is we built options training. So no matter if you're new to options or you've been trading for years, we're going to help provide to you a streamlined options support. So no matter what your current experience is, as long as you have an app to learn, then we'll teach you about options with various programs that we're going to give to you. So trading signals. So this is done 3 times a week. So Sunday night, Tuesday night, Thursday night is the sequence of signals that get sent out. You all today just got one with Sting, STNG. But these signals get sent out Sunday night, and that Sunday night's good for Monday. Then you have Tuesday night, that's good for Wednesday, right? So 3 times a week we send out signals for you. They're all sent out between 7 o'clock Eastern and 9 o'clock Eastern. So that gives you 12 to 14 hours to set up your trades for the next day. That's plenty of time. It takes 5 minutes to set up a trade, okay? But depending upon your schedule, you want to have them set up before the next market open. You want to have them sitting there waiting for you. So 12 to 14 hours I found to be sufficient time to make that happen. So this question comes up a lot. How is this program different? Number one for me, it's the upfront transparency of the trade. Delivered to you up front is your entry and your exits. You don't have to rely on me. You don't have to wait on me to send out an update, send out an alert. You don't have to go to a trading room and watch a chat room all day long waiting for someone to tell you what to do. Everything's delivered up front. To me, that provides transparency, simple to follow. One of the biggest complaints I saw in my career was people couldn't replicate results, right? They'd subscribe to a program and they couldn't get the results shown, right? You know, their program would say, oh, we made 1,000% return. And they go, I only made 100%. How's that possible? Well, because everything's delivered up front, you can't go back and change it, right? I can't, edit anything. It's gone out to the universe. And so having it all up front makes it easy to emulate and replicate what you see and what you actually see in your account, right? That's, to me, one of the biggest differences. This is what the signals look like when they're delivered, right? There's the stock, there's the email on the right. Well, I showed you that before, but this is a trade from Ford. I think this was last year. This is the text message, right? So everything that you see on the email, you see on your phone too. So whatever method you want. And then you also have it on a online tracker, so you can actually see on a spreadsheet, on all the screenshots of how it all looks. So you can make it easy and just follow my signals. You can learn how to do this with me, or you can do both. I like you to do both. You get a lot more out of it if you do both. But I know, like, life happens, right? Now, at the end of the day, everyone has a guarantee. I have one too. And just like you've seen me teach so far, I like to keep it simple. So there's no criteria, there's no qualifications other than time. So 30 days is our time limit. So if you're not satisfied for any reason, just tell us within 30 days. And if you email our support team, we'll give you 100% of your money back. We don't have an army of people here, and that's intentional. We don't have a massive marketing budget that we got to overcome with the price of our product. We don't have this massive sales team that's on the phone all days long, trying to sell you stuff all day. That's not what I want to do in this stage of my career. So we keep things simple from a company's perspective, and that allows us to pass on savings, massive savings to you, because we don't have this army. We partner, just like with Investorexpo, we partner with companies like Investorexpo to get in front of you. So we basically partner, right? And that makes it also another way to pass these savings on to you. So if you can follow instructions and follow my picks, the goal is to help you make a few extra $1,000, right? Depending on how much you invest. So the program itself is the email alerts, SMS alerts, access to the cloud tracker. I already showed you what it looks like. To sign up, it's simple. All you have to do is go to rapidprofitsmethod.com. Before you go there, though, I want to give you a special offer on the site. So just get ready. Don't go there yet. I want to give you something special. Now, as I promised, I want to teach you this. I want to give you access to my analysis every single week. So as a bonus to the program, I'm going to give you access to my Market Pro Live Club trading sessions. Twice a week live, Monday nights, Thursday afternoons, about 4 hours a week. So that's for an entire year. Okay, this is an annual program. So over 200 hours of live access, I want to give you as a special bonus. It really accelerates the profit opportunities. As a second bonus, I'm going to give you access to my empowerment toolbox. Okay, this is a summation of the last 15 years, all the different tools and spreadsheets and calculators and lessons that I've put together based on all my experience of what I've seen retail traders have issues with. And I want to give you this special toolbox. It's got 10.5 hours of pre-recorded lessons on the actual momentum breakout strategy. So you actually have an archive that you can go back and learn about trend lines, how to identify entry targets, profit targets, stop losses, how to read option chains, the way we use them, all the quintessential aspects of what I shared today, obviously in a deeper dive, but it's a core component of that toolbox. For those that are new to options, or maybe you're a bit rusty, or maybe you've got experience but you want a simplified way to trade options, we're going to give you what's called the Options Mastery Academy as a special bonus as well. Now, one of the most underutilized aspects and underfocused aspects of trading is money management. Okay, so we go through a lot of money management training in the Market Pro Live Club, how to manage your trades, how to manage profit targets, how to set up guaranteed profit trades, things of that nature. So that's where we focus, is on the training aspect. So I'm going to give you a special training on that as well. So each session of the Market Pro Live is archived. Okay, so no matter if you can't make it live or not. So I recommend, if you start today, go watch yesterday afternoon's live session. So they're Mondays at 7 o'clock Eastern and Thursdays at 12 p.m. Eastern. Those are the class times. Here's the empowerment toolbox. I already talked about the course agenda, 10.5 hours on the momentum breakout strategy. Another favorite aspect is the checklist that I put out there. I also put up watch lists, things of that nature. So the toolbox is a great bonus that my clients enjoy. We also give you the Options Master Academy. So this is what it looks like. The focus is really simplifying options trading. There's about 40 plus option strategies uncovered here for you. So from beginner, intermediate, advanced, we put together a collection of the top 40 option strategies for you. Money management, of course, how to maximize profit, how to increase profitability, different ways to lock in profit on runners. Okay, so high breakout stocks, how to trade them using multiple profit targets. So everything here easily is valued at over $8,000. I mean, we've sold pieces and components of this program for the prices that I shared with you earlier. But as mentioned, this is less than $300 for the year. So you're going to receive everything from the email alerts, SMS, everything with the program of the rapid profit method delivered to you, plus all the bonuses for $299 for the entire year. No other hidden fees, nothing like that. $299 for the year. As I mentioned, before you go to the checkout page, I'm going to make it even easier for you. The first 10 who go right now to the rapidprofitsmethod.com, the links in your chat section, you can get all of that for just $199 by typing in Matt, M-A-T-T, 100 in the coupon code. So now for the first 10, because to trade, you got to be able to take action, right? When that go moment appears, you got to take action. This is going to reward those fast movers. You're going to knock off $100 off the price. Whatever price you pay today, you lock in. So if you want to keep this next year, then you're going to renew at the price that you paid. So if you paid $199, you're the first 10, you lock in that price. But you've got to go now and do it. Remember, you got to guarantee. I don't expect you to be a believer in a few hours, okay? I will say this, if you come to 2 of my sessions, live sessions that I'm going to give as a bonus, those entire year's worth of trading analysis in the Market Pro Live Club, you go to 2, I guarantee you're going to love it. That's my guarantee around it. So you need to spend some time with me, okay, a few hours a week. I want you to follow along with the signals, and if you're not satisfied in that first month, then let us know. We're not going to chase you down. Like I said, we don't have an army. That's how we're able to pass the savings on to you. We don't have an army of salespeople hitting the phones and calling you every day. We don't have a huge marketing budget that goes out, and ultimately, the more costs we have, the more we have to charge, right? But we're simple, and we keep things highly reliant upon technology to deliver the content. We use the live webinars in my Market Pro Live Club sessions that you're going to have access to as that bonus for the year to support and to teach, right? So we're really using all the technology at our disposal to make this more affordable than the $2,000 to $3,000 that other companies would charge this for this type of program. I've been around this industry long enough. I've created and sold over $150 million worth of products in my career. So I know exactly what's in the marketplace. I know exactly how products are delivered because of my previous role as the chief revenue officer. Okay, so I understand fully what the products are that exist, and I also know that we don't need expensive software to accomplish that goal. You don't need it. I can guarantee that for you. So the method is software agnostic because of the simple indicators we use, but the method of putting it together, that to me is where the power comes. So if you're going to the site, I always want to keep my eye on you to make sure if you're going to sign up, type in RPM in the question section so I can make sure that you get your Matt 100 coupon taken out. Now on that page, you're going to see 2 special bonuses. If you want to add to your experience with us, there is the options profit generator. So that's an additional signal service program that is focused on low cost option contracts. So those are $5 premiums or less. So the average option signals there are about $2.60 a premium. So that is primarily for those that like the flexibility of lower price premiums. I don't send out Apple options or Tesla options just because the cost is so high. Not that they're bad, it's just not a lot of people can afford to trade those. So I like to keep the rapid profit method below $8 a premium. The average of the rapid profit method is $4 and maybe 20 cents. So still sub $5, but not as low as the options profit generator. That program has been around a lot, has a lot more trades because I've been running it a lot longer. But the method of the signal services is the same as you saw today. It's just different types of signals that go out. but that's a nice offer for $39 a month. You can cancel that at any time too, but that's normally sold annually for anywhere from $700 to $1,000 a year. So that's a special offer if you want to add that on. And then we also have the report bundle. So the report bundle is a phenomenal opportunity as well, because that is for those that really like to dig deep into the market. To me, my most favorite report in there is around Warren Buffett. You actually, there's hundreds of pages per report, hundreds and hundreds of pages. So it's really a deep dive into the methodology of how Warren Buffett picks stocks. And it's really an amazing look behind the scenes. So I like reading content. I like tangible content. I can print out, I can write notes on, and that's what that bundle's for. Yeah, I'm with you. The comment is AI software gurus are spendy but disappointing. Yeah, I mean, I always think about the 80-20 rule, right? Pareto's 80-20 rule, right? I mean, there's 20% of them are good, right? The other 80% are just basic knockoffs. So I've sold lots of software in my career, and I got to show you one thing. I mean, there's probably 5 free resources that I use in every Market Pro Live session that dwarf all those expensive softwares in one. I mean, it's an information age. So as long as you know where to go, there's so much great information out there that I uncover and I use in all my classes. So, I mean, there's enough cost in our life, especially with inflation the way it is, right? If we want to take advantage of the markets, I don't see a reason to be spending thousands and thousands of dollars a year on services. MAT100 is the coupon code. So it's on the screen. MAT, M-A-T-T 100 is the coupon code. It'll take off the $100. So make sure if you're signing up, let us know. I see Arthur, there's lots of you signing up. Okay, good. I want to make sure I'm with you. All right, so when you sign up, you're going to receive a welcome email. Okay, so just want to give you the expectation. So once you sign up, you're going to receive your welcome email. You also receive an invoice. Okay, so you're going to get 2 emails instantly. You're going to get your receipt of the details. Okay, then you're going to receive a welcome email that has your membership link and then your access. Okay, so you're going to get that via email. And then in about 15-20 minutes, you'll get your GoToWebinar confirmation for the live sessions Monday nights and Thursday afternoons. So our next training session is Thursday at noon. So you'll receive that link as well. And it's GoToWebinar just like this was in GoToWebinar, right? You'll have a link specific for your Market Pro Live sessions. And if you're signing up today, you're going to receive your first trading signal this evening. Okay, so what I recommend is you go to the membership site when you first sign in, and watch how to set up your trades. So the lessons on how to set the trade up. So that way you know going into it. I also recommend if you're new to this, the process I shared with you today, if that's new, practice in a demo account. You're gonna have plenty of times to follow along, but I don't want you to hit the wrong button. I want you to practice it. So if you're comfortable, then you're comfortable. But if you're not comfortable, then I want you to practice in a demo account. And then on Thursday in class, you can, I'll pull up trades and walk you through it again, right? That's why I have live sessions. So you can bring your questions, bring your stocks of choice. You can, ask whatever to your heart's delight. If I don't know a question, an answer to the question, then I'll go find the answer for you. I'm humble enough to know I don't know everything, but I do know quite a bit. And if I don't know it, more than likely the room knows it. We have hundreds of people that follow these signals, so you're not alone. All right, so if you have any questions, I want to leave this up here. So if you need any questions on support, I want you to write down this information. Here's our support email. We got Kim and Linda that are helping support. So you can email support@concordiafinancialexchange.com. You can also text or call 407-498-6508. It's on the screen in front of you now. So that way you have an immediate resource if you need any help. And if you're having any issues, let us know here too. So I'm going to leave this open. Let me see here, Tal. Let's see. Yeah, Tal. Okay, yeah, you can give us a call. I'll flag you too. I see you have a support question. I'll flag it here, and I'll have Kim or Linda. They're watching, monitoring the session too. I also have Alan helping to moderate. So, yep, you've got it, Tal. Yeah, I recognize you. August. Oh my gosh, time flies, right? It's November 1st. How time flies. Yeah, we'll make sure we get you all squared away. Yeah, no worries. All right, perfect. So I'm just going through the questions. Looks like I've got the questions answered. You know, I shared the tracker. As soon as you log in, you can go check out the tracker. You can see all the activity there. And then you'll see open trades. Those are active trades now that are still open. Okay, you'll see closed trades. Closed trades are ones that either hit profit target or stopped. And you see missed trades. Missed trades are those that didn't hit the profit target or the entry target. Okay, those are the ones. Missed trades means they did not trigger by the trigger date. Okay, so those are called missed trades. So there's only 4 categories. When there's a new trade, you'll get an email, you'll get an SMS text message. So sign up for the SMS. You'll be able to sign up for the text message after the first email. So on the first email, you'll see a button to sign up for SMS. I recommend you do so. So that way you don't miss any signals. And then you always have the tracker to go back to if you need it. Okay, so it's all in court. You can get them on your phone. You can log in on your phone and see the signals too, so it makes it easy to trade there. Average losses, you talking about per trade or on a trade by trade? Yeah, I showed the results earlier. So we're on so right now it's just under 64% winning percentage, and net profits 342% over the last few weeks. So the rapid profit method, we started this specific style of signals in August. I've been sending out option signals since 2000 and I can't remember, 2018, 2017. So since 2020, I've been running a 3,500 net percent profits, 61%. So I always get that question, well, how are you able to make money at just 60%? Well, because our winning trades are double what the losing trades are, right? Percentage wise, if not more. So it's all about the money management. When we're wrong, we want to cut our losses and move off. You see, losing isn't, to me, I don't look at, I've built this up over 15 years doing this, but when I get stopped out, I don't look at it as a loss. I look at it as saving that equity so I can get into the next trade, right? So one thing here is we don't sit in trades long. If we're wrong, we want to get out and move on to the next one, right? So we want to cut loss. Too many retail traders trade without stop losses. And then you ask yourself, how can I keep losing? Well, because you let losses run and you cut profits. So having predefined profit targets, predefined stop losses, removes that emotional decision making that ultimately hurts. Because ultimately that's what happens. You cut profits off, you exit early when you're in the green because you don't want to go to red. To me, it's always more fear of losing profits. People have more fear when they're up to lose the green And so you cut your profits off. You've got to maximize your profit. You got to take it to the profit, and you got to let it go, because there's too many times where you take your profit and then it keeps going and going and going, and then you kick yourself, and then you've built up this habit of increasing your fear every time you're in the money, right? In the green, in the profit. And so it puts you in a negative position simply because you don't maximize your winners. You cut them off too early, and then you don't cut your losses early enough. You let your losses compound and grow versus just eating it and moving on, right? And I know what it's like to do that. That's why setting them up in advance puts a damper on that knee-jerk reaction. Okay, Tal, great. Yeah, we'll get back with you. Oh yeah, no, I get it, LW. That's why I like it says I know someone blows you smoke when they only mention win rate. Yeah. Yeah, trading is a real, I mean, we're humans, right? No matter if you're following an EA or not, right? There's a human element to everything in our lives. And losses are real and wins are real. And ultimately, there are ways to build a track record. If you want to sell a winning percentage, you can do it very simply. Anytime you're in the green, you close it out. Anytime you're in the red, you just hold on forever until it goes back up again. Eventually, everything goes up. The difficulty with options is that you can't hold on to something forever because you have an expiration, right? So, to be successful in option trading, you don't need to have a super high winning percentage. You need to have a strong foundation of equity management, because most of the time it's how much, how successful you become is more so how many battles you can win, right? And what I mean by that is how much of the storm can you handle, right? You'll experience losses. There's times where you'll lose 3, 4 in a row. It just happens, right? But if you deviate and give up, then at that point you lock in and realize those losses, right? To me, I don't think about a track record in terms of days, minutes, hours, weeks, years. The market doesn't look at it that way. The market doesn't care what date is, right? Price action doesn't care what date is. And so, like I said, this has been probably, for most retail traders, this is probably the most difficult trading conditions that exist. And for us to be able to pull profitable trades just shows that no matter if it's red or green, if you have a plan, and you can see the volume's not high, right? We're not sending out 500 trades a day, right? Even when I pulled the list today and we saw Sting there, right? There's only a small handful. 29 is a very small number. When the market's in a strong, consistent trend, especially on a recovery uptrend, we'll see 80, 90, 140, 200 stocks on the list. 200, right? That means there is a concerted bullish movement. When you see 200, and you'll see it, we'll be there soon enough. You'll pull up that aggressive bullish checklist and see 200 stocks signing up. 200 of them, right? Remember when I pulled the list up, there's 29, there was 22 in the other one. You'll literally see hundreds of them. Okay, so when the market's tight, there's a limited number of stocks to trade. That's why when you find yourself trading the same 10, remember I showed you the list that you gave me, right? Remember we started the event, you gave me a list, and I said, look, that's your list, right? But when I want to find a trade to trade today, I'm not going to go to a list that I created. I want to find a pattern. I want to find a breakout pattern that's ready today, not that's active in a trend. I want to find a trade ready for today, right? That's the difference here. We widen the basket. We're not just focused on a small handful of stocks. We're focused first on pattern first. So you're going to find yourself trading stocks that you've never traded before. Doesn't mean they're bad. That's not a good or bad thing. It just means you're opening up your basket and you're not stuck grinding and managing just 3, 4, 5, 6. I think the average retail trader only trades about 12 unique stocks a year. And when you join my class, you're going to see why that's not a good thing, or why that's not a good thing, because a trend is either extending or it's retracing. And the timing of when you're buying those is not at an ideal point. We want to get the maximum movement. I already showed you where that is. It's at that reversal point. And the reversals don't happen a lot. So you only have a given stock in a year, maybe 15 chances, right? But by starting first on a pattern, we're going to find yourself identifying a lot more stocks at the right time, right? And that's the what, when, and how method. With Vanguard, can you trade options on it? If you could trade options on it, just because what I showed you doesn't look like Thinkorswim's account, right? Doesn't mean it's not available. We have clients that trade on almost every major platform. So if you're trading with Vanguard, I don't see a need to switch unless you just like the look and feel of, what I showed you. Thinkorswim's not the cheapest platform. I mean, I think Charles Schwab, the last I looked, was the cheapest trade by trade. And I've got lots of clients on Charles Schwab too. But I wouldn't change first. I would, once you go through how to set up the trade lessons, just contact your broker if you can't figure it out, or I can do some research for you on Vanguard. I just never used it personally, but it's not a unique method, that I showed you, or a proprietary method to Thinkorswim. It's just going to be a different location to set up the trade. Yeah, but if you're with Vanguard, yeah, certainly ask them. Even if you can send them a screenshot of the lessons of the tickets in the membership area, and just say, look, I want to set up this kind of trade. It's always helpful if you could show them what it is, because sometimes the support at these brokers just don't trade, so they don't understand the language. So sometimes it's easier just to send them a screenshot of so go to the trade tracker and then pull up the trade ticket, and just send it to them if you can, the support team, and say, I want to do this type of trading here on Vanguard, and that'll probably be helpful. Yep, you got it. No worries. Yeah, you can tell I get that question a lot. I mean, Vanguard, I can ask on Thursday too. So whenever you're in class, just remind me and I'll ask the room, because someone in there more than likely has used them, one of my traders, and they'll be able to help too. Yeah, I mean, there's many ways to trade options. That is for certain. So I don't know, the method of that guru you're talking about, but the one thing I know about options is that there's a strategy for almost every specific type of market condition. It's just, number one, having the capital to do it, because some of the options are, more expensive than others. Some of the other strategies are more expensive, right? But for me, I find plenty of opportunities just trading classic calls, classic puts. But there's times for, covered calls are relevant, right? But I've got a lot of traders that trade, multi-leg options, and they use the same strategy here, right? It's really just a different method of identifying these opportunities. Yeah, so it's not a class tonight. So classes are Mondays at 7 o'clock Eastern, Mondays, and then Thursdays at 12 p.m. Eastern. Tonight is it trade signals. So Sunday night, Tuesday night, Thursday night, signals get sent out. Yep. Yep, you got it. All right, so with that, I'm gonna leave this open. So if there's questions, I've got my team of moderators here. So if you've got questions on sign up process, anything like that, if you haven't got your email yet, let us know. We want to make sure that we get you the logins. Emails is something we can't guarantee delivery on. Today's day and age, these email service providers control your inbox. So you may not even know it, but they're not delivering things to you. Okay, so let us know if you haven't got your invoice yet, your welcome email. Just type it in here. I've got my team of moderators here watching, but I've got to end my live portion. So at this point, I'll leave the room open. So if there are questions, please let me know. Let our team know. They'll watch this room for the next few minutes. But ultimately, you got the support on the screen in front of you, so just jot it down if you need it. But other than that, it's been a wonderful class. I appreciate all the questions today. There's lots of great questions. I could tell by the number of people signing up that there's a lot of interest in this method, and I definitely am looking forward to working with this new group. Just know in the rooms, there's people that just started like you, and there's people that have been in the room for several years following this program. And so we have an upbeat room. We have a lot of fun breaking down the markets, and we have a very open room to all sorts of questions. So don't be shy, ask your question. Just like in school, you know, the more you engage in it, the more you're going to get out of it. So I always welcome all questions. And it could be about a specific stock, could be about the market, could be about tomorrow's federal fund interest rate decision that's coming out. It's going to be big. We're talking a lot about midterm elections, obviously going to impact the markets here next week. You know, so it's really a good time with good people who have the same like-minded focus and attention. So looking forward to have you join the club. So with that, I appreciate you all. Happy trading, and I will see you on Thursday in our Market Pro Live Club session. Thank you all. Appreciate it, Tao. Yeah. Yeah, I'm glad you enjoy it. Yeah, I do appreciate that comment. Thank you. So with that, have a fantastic rest of the evening. And if you're signing up, you know, by 9 o'clock, you'll receive your first trading signal with us. So looking forward to having you join us.